Bitcoin has been consolidating in a parallel channel for just over 4 days. Where is Bitcoin likely to go next? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at Bitcoin on the short-term charts, discussing the parallel range and of course the next expected move for Bitcoin. Before we get into it, smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. That will be the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP group, we post trading signals with exact entries, exact targets, exact stop losses, and trade justification and charts. Not only will you get access to trading signals, you'll also get access to our group chats, our general chat, our trading chart and education chat, our help chat, our news chat, our trade setup chat, and of course our daily video chat. If you're interested in accessing all of that, go ahead and contact me in the pinned comment in the free channel to find out more information. Let's dive into the video, guys. Starting on the market data. How are we currently looking for today? So currently 24-hour liquidations are sitting at a total of 66 million. That is up 5.73% on the 24-hour period, with volume up 8.41%, sitting at 59 billion. So not all that much change in terms of volatility and volume in the last 24 hours. We're more or less sitting quite even. Looking at the 30 and 60-day volatility period index, we can see not a lot has happened over here. Again, the 30-day is still gradually pushing downwards as the price is pushing upwards. This is generally not a great sign. We still are expecting a surge in volatility to come in upcoming days. Looking at the 60-day period, we can see the 60-day period is still moving toward the downside again as the volatility index is moving down and price is moving up. We do have this little bit of a discrepancy between strength, which could indicate we're going to see an explosive move coming quite soon. Moving over to the DXY, we can see the DXY is still struggling to break above this trend line, right? We saw a little bit of a breakout, but we didn't really sustain that. We pushed back under and we are still gliding underneath this downtrending trend line. Now, while we remain under this trend line, we do still expect the price to retrace towards our 50 EMA, and of course the 50 EMA could provide some temporary support. If we lose a 50, we are looking for these lower support levels, so 104.5, potentially 103.5. If we do break back above this downward diagonal trend line, clear out this local high, we then are expecting a nice strong move back to retest 108. Of course, if we do get an upwards move, that could be very, very bearish for the markets. If we do get this downward move, we could see some short-term relief on the higher time frame. So moving over to the stock market, we can see generally S&P 500 here not looking fantastic, right? We have broken back underneath that major uptrending trend line. If we move over to the weekly chart really quickly, we can see with 21 hours remaining on the weekly close, if the S&P does close under this trend line, we are looking for a move back to that 50, and we are definitely looking for a move back to 4,200. A little bit of pullback expected there if we do close that weekly candle. Moving back over to the Dow Jones over here, we can see a similar kind of setup. Rejected from this high time frame resistance, this trigger created another lower high over here. We expect this trend to continue downwards into our lower area of support, where we will either break through and continue downwards or find support and create a new uptrend. Again, for this trend to break, we do need to be breaking above this downward diagonal trend line. This marks the current downtrend trajectory. If we do break over that trend line, we could see some short-term relief back toward the upside. Let's go ahead and jump into Bitcoin. We're going to keep today's video short and sharp because there is not a whole heap to be discussing. But first and foremost, the most important things we need to discuss are this. Bitcoin has actually closed a daily candle above the 28,641 level. Now, I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Now, if you remember, the 28641 level is going to be that bull market support band according to our price chart. If we go ahead and draw that horizontal trend line in over here, the 2861 level is going to be marked by the bull market support band. In fact, a little bit higher. We do have 3 days remaining, and it is very important that the weekly candle closes above that above the Gaussian channel, not the bull market support band, the Gaussian channel. If the weekly candle is able to close above that Gaussian channel, that is going to signify a very strong shift in strength. More importantly, it's going to denote a shift in direction. It is going to indicate a shift from a weekly downtrend, right? Because we're in a weekly downtrend sub this level, a weekly downtrend into a weekly uptrend. And we could actually see a high time frame continuation upwards from that point. So we are definitely watching out in 3 days for a weekly candle close. As of right now on the daily, we are looking good. We're holding above that Gaussian channel upper band, but we do need to close off that weekly candle above that level to actually validate that shift in strength. So we're definitely watching out for that, and it's something you should be keeping on your radar. Moving forward from that, guys, we do have to understand there is a lot of volatility, there's a lot of news events, and there's a lot of manipulation going on right now with the ETF news. And I've said this many times, and I'm going to go ahead and say it again. The ETF news, the dependency that the market has developed over the course of 5 or 6 months for the ETF news is incredibly dangerous and bad for the market. The SEC, the big money, the institutions and hedge funds have almost created an environment where retail is now dependent from emotional and financial perspective on the success or failure of the ETFs. Meaning, if the ETFs are delayed, retail gets emotional, they sell off, the price crashes. If ETFs get approved, retail gets emotional, they jump in, the price pumps. They're almost manipulating your decisions, manipulating your emotions. And this is why I personally don't believe the ETFs will be approved anytime soon. I think we're going to see it dragged out, because why would they give away the golden ticket? They're holding a carrot in front of your face, and they just dangle it there, and they manipulate your decisions as an investor. Do not listen to what they say. Until the ETF is approved, it should be considered not approved. You shouldn't be jumping into FOMO and hype. When it gets approved, that is when it is approved, and that is when you can actually take it for what it is. If the ETFs, for whatever reason, at some point in the future, get declined, okay? They get declined. We've seen this happen before. In 2018, for about 3 months, there was ETF news, Bitcoin spot ETF, futures ETF, everything's going to get approved. All of a sudden, they got declined, the market crashed. And if we do see a similar thing, that could be the trigger for that 25.2 to 24.4K support being lost. I actually do not see this level falling. I do not see the price dropping below this level without that ETF news being declined. The reason being is this entire base of support has been developed on the backburn, or should I say on the backbone of that ETF news being bullish for the market. I would go and add a further note. I would like to inform people that people need to take a moment and really think about what an ETF means for cryptocurrency and Bitcoin. Sure, you're going to get a pump on the short term. Sure, you'll make some money, but you probably won't sell. So you're really making money. The big thing is ETFs create supply not demand, okay? If $100 million is entering the market, if there's an alternate method for that money to get exposed to Bitcoin that doesn't influence the spot market, they may potentially take a percentage of that money and put it into ETFs as retail. So less money actually comes into the cryptocurrency market, which influences the price. Hence, it suppresses the overall growth over a period of time. It doesn't bring it down, but it could suppress the potential growth it could have if an ETF wasn't an option. Furthermore, if the governments are really hell-bent on regulating cryptocurrency, they understand they cannot control the asset. They know they can't control cryptocurrency, so the next best thing is to regulate and control the inflow of cash into the market itself. How do they do that? They force you to trade with centralized means. What do they do? They limit access to exchanges. They drop or block deposits to exchanges, okay? They stop withdrawal from exchanges. They start promoting stuff like buying cryptocurrency through centralized means, hedge funds, Vanguard, stuff like that with ETFs. They tell you you're buying Bitcoin, but in reality, you're just buying an ETF contract. It's not actually Bitcoin. If you want to buy Bitcoin, you need to buy it on an exchange, put it in a cold wallet and hold it. It is now your asset. If you think about Bitcoin, what is Bitcoin's main value driver? It's the fact that it's autonomous, right? Anyone can buy Bitcoin and it is complete anonymity, okay? Number two, you can transact it globally at any time. Those are the main value drivers of Bitcoin. Number three is that it's outside the current financial system. It's a hedge against the financial system. That is exactly what gives Bitcoin value, right? In essence, it's almost like a commodity. That is what gives Bitcoin value. It doesn't hold any other purpose. So if you extract that value from Bitcoin and you just buy the contract, which is the ETF has no inherent value. It doesn't mean anything. It's just pegged to what the asset is doing, but it doesn't give you ownership, it doesn't give you control, it doesn't give you any of the benefits that having Bitcoin actually does. And that is why personally I'm against ETFs. I don't see any reason why I would want an ETF to be approved, because if it does, the majority of new retail is going to buy through ETFs. It's going to give institutional money to purchase real Bitcoin on spot and manipulate the market. It's just going to become another institutional coin, just like we see in the stock market time and time again, just like we see with gold, just like we see with pretty much everything in the stock market. And that is personally why I don't want ETF to be approved. But we're going on a tangent over here, but I think it's something you should think about. You know, do you really want an ETF to be approved because you want to make some money? Because if you want to make some money, learn how to trade, okay? Learn how to make money. There's money to be made, okay? You don't need institutions to pump your bags to make profit. If you're waiting for institutions to pump your bag, you're probably going to be waiting a very, very long time, and you probably catch the short end of the straw anyway when it does happen. Instead, focus on the actions you can take today. Do what you can do to put yourself ahead instead of waiting for people to make those decisions for you. Moving forward, guys, let's go ahead and talk about the short-term price action. Again, we're on a bit of a ramble over here, but I think it's important to discuss because the news is getting more prevalent, it's becoming more frequent, it's getting more intense, especially after that fake news pump. Everyone's thinking about it, so I did want to cover that. Let's get into short-term. So, as we said already, guys, if Bitcoin gets above this level, like we said already, we're going to see we flip into a weekly bullish trend. We have done that, right? We're flipping into a weekly bullish trend right now. There are a few warning signs and a few things we are concerned about on the short term, which we'll discuss, but overall we are starting to see strength develop and layer on top of each other. The weekly chart is not quite yet there. We do have to wait 3 days for that Gaussian channel break. If that does happen, that is going to be an added piece of information to suggest we do have that overall strength. But let's jump into the short term, because where we're looking now, which is this resistance over here, is this area on the short term, which is represented by this range. If we go ahead and drop in that 2641 level, that is a Gaussian channel upper band. In yesterday's video, the price was all the way down over here. We're going to show you what happened yesterday. The price was back down over here. We told you we're developing a neckline of resistance. We said that if we break above this neckline of resistance, you should look to exit your shorts, move your stop losses, jump into longs. We're looking for a swing up to our upper range. We saw the swing up to the upper range. Now we are back at the range high. And although we did say, if we get above this level and show strength above this level, we're likely to continue upwards, we do have to understand we have not done that yet. And while we are at resistance, resistance is resistance until it is not, and therefore you should be looking for shorts with tight invalidations on those shorts, stops above these local highs, looking for that. You can also flip into longs if we do see strength in this point to push and continue upwards. We'll discuss that in a second. As of right now, we are still in the horizontal range. Let's go ahead and do an unbiased measure move analysis. So taking a measure move analysis of this range, we take the width So the low to the high, we apply that to the breakdown and break up point. The break up point from this level will take us into this higher range, which is going to be this plus $29,000 level. As we said, we do expect $29,000 to be reached if we flip this channel bullish. Again, this does suggest we could potentially go as high as 29.3, and we actually went ahead and took this 15-minute high over here, and we said we could potentially go as 29.5. So we are looking for that as a bullish target if this range flips and breaks out. For the downside, if we break toward the downside, we do then expect a continuation lower. Again, our local support on this level is going to be at this liquidity zone of around 27.6 to around 27.7. That is still going to be a bearish target if this level breaks toward the downside. Again, like we said in yesterday's video, do not expect the price to break down until it does. That was not the time to be taking shorts. Your short should have been taken over here. You should be taking profits over here. If we broke down, we would continue lower. And that is the same goes for now. The range is still intact. And therefore, if we do break down from this range, we do then expect that lower price. We'll talk about the implications of that on a higher time frame in a second. So first and foremost, before we get into that, we do have to identify the current trend. The current price action is in a overall uptrend. So we can see this overall uptrend leading into resistance. We'll come back and discuss that, hold that thought. So moving back to the high time frame, if we do lose this level, that will take us to 21.8. And of course, if we lose 21.8, that is going to push the price back underneath this 28 to 28.4 major area of support. It's going to automatically make this chart look very bearish, okay? It's likely going to push the price lower, 27.6 up to this uptrending support line potentially, and it's going to make that weekly chart look very bearish. So this current short-term range is actually more significant than you think, right? Because if we break downwards over here, the charts on the weekly and daily will all of a sudden look very, very bearish, and the price is likely to continue lower. But if we break upwards and push up to 29, the charts are going to start looking incredibly bullish, and that weekly close over the Gaussian channel is going to become ever so more likely. So very important, pay attention, do not ignore the short term. So really quickly, guys, hypothetically, we break upwards. Hypothetically, we break upwards, like we said, 29K is our target. We're looking for 29K. Where would be the next resistance levels? Again, we're looking for these local low ranges over here. So the primary area is going to be this level at 29.7 to 30,000. A very key level to break above. If you remember back to our videos in this range, we had this horizontal channel develop over here. We had deviation toward the higher side. We saw a breakdown, rejection, full-blown correction on the ETF delay. This is going to be that main point of resistance if we continue upwards. That is where we're looking for if we do break upwards and break over that trend line. That will be the next kind of area that we're looking to target, okay? If we break downwards on the short term, right? If we break downwards on this short term, and we do come down, we are then looking for a retest of this uptrend. This is our current uptrend. If we've been in an uptrend, we've been in an uptrend since this 25.2 retest. Again, no surprise, 25.2 major area support. This is what we said the local bottom is likely to be in. Again, this is our retest over here of that support line. We have 1 point, we have 2 points on the downside. If we do retest, we're looking for a third point of a retest on the bottom side. And of course, if we get that third point, the probabilities of breakdown significantly increase. So a lot does actually rest on the short term. It's showing you how significant this short term actual structure is. Moving back to the short term, guys, for us to see confirmation of a continuation down, we need to drop below this short-term uptrending trend line. That means, okay, there's two options you can go ahead and do right now. You could take a high risk short, okay, high risk, low. High risk doesn't mean you're losing a lot of money. High risk means high risk is kind of a connotation to the probability of success of the trade. That's how I use low risk equals high probability of success. High risk is like a low probability. In my eyes, low probability is anything under my standard win rate. My standard win rate is around 70%. So if it's under 70% probability based on my conclusions, then I would call it a high risk trade. That's how I kind of go ahead and define my trade. So this in my eyes would be a high risk trade. It's a less than 70% probability of success. I would say if we lose this trend line, the probability is then becoming in favor of a correction downwards, as the trend will be lost. So if you're looking for an easy and safer short, watch for this trend line to break. If the trend line breaks, we show weakness under here, we could then see a correction back down towards this 28.4 level, which is going to be this local area of support. And again, if we lose that level, that is when we flip bearish. So if we look at the range, okay, we have the dotted trend line, we have the upper part of the range. This is the bullish section of the range. We have the lower part of the range, which is the bearish section of the range. Therefore, if we lose this level, that is when the probabilities of a breakdown increase. If we look at the bullish section of the range, if we see deviation above and we break into the range, okay, so meaning we're above it and then we break from the top side down through the top range, that actually signifies a downtrend. So right now we are in a short-term downtrend, a higher time frame uptrend sustaining the price action. Meaning, while we remain under these local highs, the probabilities are slightly more in favor of a correction than a break upwards. So we're still a high-risk traders. There's a less than 70% probability, but there's a greater than 50% probability that we do see a breakdown. And that is why I've actually taken a short over here with very tight stop loss and invalidation. And that is why I expect a correction downwards. So again, how that plays out, however it plays out, it doesn't matter. We take the trade, we assess the probabilities, and we manage our risk. If we do break upwards and we flip strength, we'll be taking longs for a continuation upwards. Okay, guys, I'm going to go ahead and leave the video there. Actually, one more thing. Let's go ahead and say one more thing. If you want to take a double look at this, double look at that momentum, right? Watch that momentum, see a momentum break downwards. Again, that will signify a potential correction occurring from this trend line, okay? I'll leave the video there. I hope you have a fantastic day, and I'll catch you guys in our next video on Sunday. Again, weekend price action coming up. Expect volatility. Expect no volatility at the same time. Sometimes we get crazy volatility on the weekend. Sometimes we get nothing, okay? Expect sporadic price action. I think it's a better word, sporadic price action. And guys, more importantly, if you are a trader, I keep emphasizing this. If you're a trader, like me, I'm a trader. Don't get caught up emotionally with what Bitcoin does. It doesn't matter. And this is why I tell everyone, this is why I say, why I believe I do such a fantastic job at analyzing Bitcoin and trading is because I don't hold any Bitcoin. I have literally no bias to if Bitcoin goes up or down. I have no skin in the game. It does not bother me whatsoever if Bitcoin goes up or if Bitcoin drops down. Obviously, I'd like Bitcoin to go up because I like cryptocurrency as a whole. I think it's an excellent space. If we go too low, it could, threaten public perspective about it. But overall, if Bitcoin goes up to 29K, or if Bitcoin drops down to 28, it doesn't bother me. And if you're a trader, you need to decide, yes, I'm a trader, or yes, I'm an investor. If you try to be an investor, if you're an investor and you try trade, your emotions are going to conflict, okay? You're going to be too emotionally attached to every move that Bitcoin makes. You're going to feel like you're missing out on everything. You're going to feel like you're always late. You're going to have a hard time, okay? If you're a trader and you know you're a trader, but you think like an investor, the same thing's going to happen, okay? If you're an investor, you do have a stake in what Bitcoin does. Opportunity cost is a real thing as an investor. So if you're not in a move and Bitcoin goes up, yes, that's the problem. But if you're a trader, it doesn't matter. Because the only thing as a trader that we care about is opportunity, okay? Taking positions, and we care about the percentage change when we're in those active positions, nothing else, okay? Think about what you're doing in the market, okay? Define what you are. Learn your style, practice, okay? And that is it for me, guys. Hope you enjoy it. Catch you guys in the next one. Cheers.